Hello ladies and gentlemen, and a very warm welcome to today's webinar, which is brought to you by sharedserviceslink.com and sponsored by Ariba. We're looking today at how to turn on the power in accounts payable by extending your ERP with Ariba for true e-invoicing. So let me just introduce your lineup for today. We have, of course, myself, Susie West. I'm the founder and CEO at sharedserviceslink.com, and I'm going to be introducing James Tucker, who is the Global Director of Network and Finance Solutions at Ariba. And James is then going to be interviewing Bernard Fisher, who's the VP Market Development, Business Suite Shared Services and BPO at SAP. So we're looking forward to that. Then we're going to be passing back to James in the last 15 minutes of the webinar to go a little bit more into the detail. So you do have a role to play in this, as always, and that is to provide me, please, with your burning questions that you really would like to have resolution to during this webinar. So you have a panel highlighted in red, and I ask you just to submit your question, please, in that free text box, and submit that through to me, and I will put the question to our presenters, our speakers, in the last 10 minutes of the webinar. It really is important that you leverage this opportunity, use this opportunity to make sure that you really do get questions, get the answers to the questions that have been nagging you, please. So just before I introduce our first presenter, James, let's just have a little bit of a chat about why we're actually having this session today. We do many surveys at sharedserviceslink.com, and when we focus on the European market, it becomes very apparent that between 60 and 70% of the shared services organizations that we survey run off SAP, and increasingly we're finding a trend that it is a single instance of SAP. Now, you'll be very familiar with the news that broke in May 2012, which was the news that SAP had acquired Ariba, and it was a very exciting time for the market, and meant an awful lot, I think, to the F&A shared services market. And so what this session in particular is going to be looking at is why the acquisition took place in the first place, what the acquisition means to you and will mean to you, and how this potentially means or does mean an extension of your ERP functionality. So these are all areas that we will be looking at in the next 60 minutes. So with that in mind, I'd like to introduce our first presenter, please. Over to you, please, James Tucker, who's the Global Director of Network and Finance Solutions at Ariba. Over to you, James.
Thanks, Susie. As I was thinking about how to introduce this topic, turn the power on in AP shared services, it was near and around the time of what is the Super Bowl in the United States, which is the championship football game of the two leagues that come together, and it kind of got me thinking about some I guess world-class power outages that we've seen over the past year. There was one last summer in India where there was an estimated 600 million people without power in the heat of summer. And then, of course, during the Super Bowl, we're watching it, and being from the Silicon Valley and a San Francisco 49er fan, it was exciting to see the 49ers in the championship game. And suddenly, as you see in this chart here, the lights go out, and they were out during the game for over 30 minutes. It was actually pretty remarkable. I blogged about this on the blog site, The Networked Economy, and I talked about how world-class finance and shared service organizations are turning the power on in accounts payable, trying to increase the strategic value of those organizations. I've blogged about the fact that there's about $10 million for every $1 billion of spend in new and improved strategic value that's transforming accounts payable and shared service organizations. When you sort of did the math on the cost for the lights being out in the Super Bowl, it was estimated at about $250 million, $250 million for 30 minutes of the lights being out. And it got me thinking for this session, what is the opportunity cost of not transforming your finance and your AP shared service operations? So let's take a look at that. As we look in our personal lives, most of us probably can't imagine a world without the internet, right? Every day we're connected and we're collaborating with our peers, our family, merchants, and in fact on a daily basis, there's about 340 million tweets that are conducted, and about 1.5 billion Facebook posts on a daily basis. 4 billion videos are viewed on YouTube, and there's over 2 billion euros of commerce that's traded on eBay and Amazon on a daily basis. It's remarkable. What we're seeing really is the convergence of technologies, cloud, mobility, analytics, social media, and it's really having a profound impact on the productivity and opportunities that we all have in our personal lives. But as I look and think about the magic of Facebook, it's really not on its cool interface. To me, it's really about the fact that now it represents the world's largest network of personal connections. And when I think about Amazon, I don't think it's just the fact that it offers the best prices on books. I think it's more the fact that it's the world's largest and most convenient network for personal shopping. So personal networks connect us to these communities of people. It's really helped us listen and learn and ultimately live better lives. So I guess the question in this context is, why shouldn't businesses have a similar experience? When they need to buy things or sell things or manage their cash in more appropriate ways, why shouldn't their experience be similar to that that is in our personal lives? We know that organizations have spent billions of dollars on their internal processes for improving jobs and functions and systems, improving operations within the four walls of their organization. However, the state of collaboration with trading partners outside the four walls is still quite limited. For example, you see here that upwards of 80% of business transactions, things like purchase orders, invoices, payments, they're still paper-based. EDI has been around for well over 20 years, but it's still typically only cost-effective with a small percentage of suppliers, and oftentimes only suppliers that may represent a certain commodity class, like direct materials. We do see the use of portals for status and such, but these often require a point-to-point connection between a buyer and a seller. And this can be also very costly, and costly not only to deploy but to maintain. So once again, its impact has been quite limited. In fact, in today's day of smartphones, most business commerce, based on this information, is really still operating in an era of the rotary dial phone. This means that companies are dealing in costs that are higher than they ought to be within procurement or supply chain management, accounts payable, shared services. And on the sell side, of course, sales and customer services, accounts receivable, these are all operating in much higher cost basis than they could be or ought to be. Also introduces supply chain risk. Could mean inventory shortages. It could mean lost sales and revenue. It could mean plant shutdowns. And again, a poor management of capital. We'll talk more about this, but the high percentage of errors and exceptions with invoices can cause significant delays, and the incorrect or fraudulent payments, missed discount opportunities. All of this really means a poor return on capital. And then the other area that I think is really emerging is that around compliance, the use of preferred vendors, VAT and tax and regulatory compliance, and of course pricing compliance with purchase orders and contracts. So all of this points to the fact that businesses are still struggling. Excuse me. There are, however, many organizations that are turning to business commerce networks, and They're using these to create a similar buying, selling, and collaboration experience as to what we enjoy in our personal lives. In fact, a recent McKinsey study shows that companies that are connecting their back office systems, their people, their processes, to their customers and their suppliers and their trading partners, they're 50% more likely to have increased sales, to have higher profit margins, gain market share, and ultimately become market leaders. And for those of you less familiar with Ariba, this is exactly what Ariba does. We help companies improve the way they buy, sell, and manage cash by creating a collaborative experience for sourcing and procurement, finance professionals to collaborate with all of their suppliers, regardless of where the suppliers are located, their size, the volumes, or their technical sophistication. The Ariba Network extends the value of any ERP system, MRO system, procurement, AP, etc., by providing a single connection. It connects that buyer's back office system to literally thousands of suppliers that are anywhere in the world. And of course, this is going to result in faster transaction cycles, touchless processing of invoices, and a dramatic improvement in order and invoice accuracy. It'll also eliminate supply chain risk and risks around inventory and stock levels. And of course, this is going to help really trim working capital and optimize the cash flow for both the buying organization as well as the suppliers that they're connected with. As Susie mentioned in the intro, we wanted to talk about why SAP bought Ariba, and it's really about this inter-enterprise network connectivity that made Ariba a strategic acquisition for SAP. As the world's largest B2B network and a global e-invoicing leader, we really bring an industry-leading cloud-based application with our network and of course the large trading community that's already transacting in the network. Over 730,000 companies are leveraging the Ariba network today. We saw an article in CIO magazine last week by Peter Sayer, and he was talking about the next phase of SAP's growth strategy following the successful deployment of HANA, SAP's in-memory applications. And now SAP is turning its attention outwards for this inter-enterprise connectivity that we've been talking about. And they plan to really help their massive customer base optimize their inter-enterprise collaboration using the Ariba network. The addressable market for this and for our combined interests is massive. If you just look at the Global 2000 alone, that represents about $12 trillion of commerce. And today, Ariba's customers represent about $3 trillion of that commerce. We're transacting about 400 billion of it through the network today. SAP systems touch over 60% of the Global 2000 commerce. And combined, it really represents an incredible opportunity for these companies and others to extend the value of their ERP deployments. With a business network, the impact can be significant. As you see here, it could mean about a 2 to 5% improvement on your bottom line. So I've asked Bernard Fischer from SAP to join us today to share his perspectives and SAP's perspectives on how they're seeing the business network impact the lives and the value and function of financial shared services centers today. So a warm welcome to Bernard. Bernard, as you can see here, he has over 25 years of experience in setting up and managing shared service centers. He also leads SAP's portfolio strategy and solution management for shared services. And he's worked on SAP's engagement program with leading BPO providers, so has a wealth of knowledge and experience in this area. Welcome, Bernard.
Well, thank you, James, and hello, everybody.
So, Bernard, I was checking out some of the work that you've done online. You've been a prolific writer, and I see that you've also spoken at a number of conferences on this topic. I'm wondering, sort of just to kick things off here, if you could kind of share your perspective on how you're seeing financial shared services leverage business networks today, and how they're using that for transformative change.
Oh, sure. I mean, I see three aspects where shared service centers are benefiting from leveraging business networks. For one, shared service centers are expected to drive year-on-year cost savings, and business networks and the associated e-invoicing capabilities enable to avoid time-consuming format conversions, manual reconciliations entirely, and that as one example of benefit helps decouple shared service centers from their ingoing labor dependency, and hence often reduce or avoid the need for the politically sensitive decisions like decisions on offshoring. Right. Second, I mean, shared service centers are expected to not just save costs but also drive process improvement. And if you think of the business network driving an entirely different level of proximity to the supplier, then and you put this in relation to an isolated strive for improving a suboptimal process like a paper to data conversion, then it becomes tangible what potential for process improvement lies in the adoption of business networks. Now, I think it's a bit of an unusual consideration that a shared service organization would drive the adoption of infrastructure, but I mean the business partner network is of such value that it ultimately brings that third handle or third lever to shared services. I mean, shared services are also expected to bring value add, to help the business in do business better, over and beyond cost savings and process improvements. And business networks bring the business closer to the suppliers, enable a more consistent behavior in the face of the suppliers, and by that help to become a preferred business partner of the supplier, resulting in better access to suppliers, or even in preferential buying decisions on next contract renewal. So business networks for sure are a powerful tool for shared service organizations to consider and pursue.
Bernard, we always hear about cloud. It's everywhere in advertisements and technology discussions. And what are you seeing in terms of the adoption of cloud, especially from a finance perspective, a finance shared service perspective?
Mm-hmm. Yeah, I mean, shared service centers, and we just did the example, shared service centers are increasingly in need to consider infrastructure to drive improvements, to drive savings. And with cloud, shared service centers gain dramatically easier access to enabling technologies, whereas in traditional models, in traditional hub and spoke models, thinking of the complement to what is now the business network, shared service centers would have had to work their ideas into a stretched IT budget, and probably worse, into the long-winded IT upgrade cycles. And with business networks, the efficiencies are at hand without local infrastructure deployment.
Yeah. One of the things that we also hear about a lot in the news and with clients and technology arenas is that subject of big data. I'm wondering if you're seeing shared service centers leverage data for improving decision making, predictive analytics, and whatnot. What are you seeing on this front?
It's essential for shared service centers, for shared service managers to anticipate patterns, to anticipate behavior to anticipate traffic patterns in order to steer the capacity of the organization and in order to improve key KPIs of the organization. And instead of building the intelligence solely on local data and local traffic, they can tap into the aggregate intelligence of business networks that usually know the patterns and have the patterns long before a local organization would get hold of them. A second item that I deem of even more critical importance is that instead of managing a shared service team, a shared service organization towards a locally determined KPIs, the KPI is sort of determined in isolation, the business network and its anonymized insight into performance of contributors and performance of participants enables shared service organizations to steer their performance towards peer performance, towards a benchmarkable performance.
Mm. Yeah, that's an area near and dear to my heart. I spent a considerable amount of time prior to joining Ariba in management consulting context around performance measurement, and I am seeing more organizations leveraging benchmarks effectively. I think we've done a couple webinars with Susie on this with Shared Services Link on this topic, and it's always of great interest. So I agree that is an area of growing importance, and do see the value of big data, and especially the business network that can deliver kind of those benchmarks at an aggregate level of what's going on globally, but then you can also slice that to understand how your peers within country or within industry you're performing against them. It's a good point. You know, we're sort of going down this technology path of infrastructure and leveraging some new technology. So I think we'd be remiss not to ask about mobility. I always think of mobile in the context of sales, but how about finance? How about shared services? Are you seeing mobility have an impact and be a factor in this context as well?
Oh, sure. I mean, let's just take the example of the accounts payable process, the invoice to pay process. That process touches a potentially unlimited number of approvers, and those approvers will be people on all levels of the organization, managers included, people that don't sit the whole day in front of a laptop or desktop equipment, but they are accessible anytime, anywhere through their mobile devices. And if a shared service organization wants to drive predictable invoice to pay cycles, then having continuous access to approvers is a key factor. So mobile, in that example, is for sure a logical option to leverage and to bring to the stakeholders in the process.
Yeah, that's a good point. I could imagine if there's a discountable invoice as an example, and you're tethered to or need to be tethered to your desk in order to approve it, that would certainly mean probably missing that opportunity. So it's a good point. Let me close with kind of an open-ended question. What are you seeing in general in terms of leading practices evolving around finance shared service organizations today?
Well, I mean, patterns evolving, best practices evolving, for sure leads me immediately to the topic of global business services, often abbreviated GBS. What is that global business service trend about? I would boil it down to GBS entails an end-to-end perspective of a business process, no longer just an isolated view on a process fragment like for instance the invoice reconciliation as such. So with that end-to-end perspective, the shared service center also needs, the shared service organization also needs to drive an environment to support end-to-end perspective of a process. And the business partner network, the business network is a logical translation of that aim in that it reaches across the entire purchase to pay process from the buyer to the supplier. That enables the shared service organization to all the benefits that it is expected to bring, from lower cost to systematic improvements like on leveraging cash discounts to added value to the business like better relationship to and with the suppliers.
Well, good. I appreciate your perspective, and thanks for joining us. We're going to take questions at the end, so hopefully you can stay on with us, and I'm sure there will be a few questions from the delegates here about what else you're seeing in the shared services arena. But thanks, Bernard, for taking your time out and sharing your perspective with us.
Thank you, James.
All right, so I thought it would also be interesting to kind of share what the analyst community and how they're perceiving the SAP acquisition of Ariba. And this is a very recent Forrester Wave report that was published in February, and I was quite pleased to see that they have Ariba and SAP leading the pack in this area of sourcing and vendor management. And I thought it would be apropos to share some of the key selection criteria that Forrester used in this context of our discussion about turning the power on an AP shared services. You see the first one there about integration of point solutions, and certainly integration of suppliers and measuring supplier risk and performance is key today. I mean, if you consider the recent scandal surrounding the horse meat and processed food, how many suppliers are going to lose their contracts, and this is going to have a disastrous impact on the meat processing industry. But I think it's cases like this that really have elevated supplier performance management as a leading practice. And I've also seen a lot of increased interest in contract lifecycle management. Certainly in areas of the world where we have stable economies and there's predictable growth in these economies, the use of contracts and contract life cycles is becoming increasingly important. In fact, I'll be hosting a panel at Ariba Live in Washington, D.C., and then later in the springtime in Berlin, talking about best practices in contract invoicing with UPS and SunTrust Bank. They have a very interesting perspective on that front and how they're leveraging the information in the business network to match their invoices against contracts, and that they've built an entire process around it. And that's very compelling and saving them a significant amount of time, effort, and dollars. There's other criteria that the analysts were looking at on this report to identify the leading providers like Ariba and SAP. And I wanted to sort of round out our webinar today with some of the key value levers that I'm hearing from customers and suppliers of how they're leveraging the business network, and certainly in the context of an AP shared service, how they're leveraging the business network to transform their organizations in new and profound ways. So let's take a look at how the business network is transforming AP shared services. And again, I think it's important to note that it's also having a significant and transformative impact on those shared service organizations, vendors, and suppliers. So the first one is really around process efficiency. We know from experience within Ariba and with third-party research reports as well that both the buyers and the suppliers are seeing about a 50 to 80% improvement in the delivery and receipt of the business documents, so purchase orders, mentioned contracts, invoices, and payments, and that there's significant savings there. Process efficiency also leads to improved compliance. Certainly in Europe, VAT compliance, VAT audits and reclaim becomes critical. Pricing and the use of preferred vendors is another area of compliance. And of course, regulatory compliance. Sarbanes-Oxley comes to mind. By eliminating paper, this is going to mean greater visibility, auditability, and control over your processes. Companies today are sitting on historically huge piles of cash with very few compelling investment options. But discounts represent a high yield, could be 12, 18, 24% annualized return on that cash, and it's also risk-free. I mean, your payables are existing liabilities that must be paid anyway. So you get high-yield, risk-free returns on your short-term cash. And of course, many suppliers still need the cash in order to effectively run their business. Improved liquidity from discounts certainly helps reduce supply chain liquidity risk. And the information that's available in the business network can also help improve the way in which you measure supplier performance. And it certainly also opens up sourcing opportunities. I'll talk about that from a supplier perspective in a minute. We talked about process efficiency. All of these savings dramatically reduce cost. With error-free invoicing, as an example, leading AP staffs are now processing over 40,000 invoices per full-time equivalent annually. We have customers that are telling us that they've reached even 80,000 full-time invoices per full-time equivalent annually. And of course, the reduced error rates are benefiting suppliers as well. They're ultimately getting paid faster. And they get paid faster because this automation eliminates the inherent delays that paper causes. Error-free invoicing means there's no delays resolving exceptions, and depending on what report you read, anywhere from 2, 5, 10, even 15% of invoices have some kind of error or exception. And of course, this impacts approval cycles, on-time payments, and cash conversion cycles. And as we've seen, with automation comes greater visibility, greater control over, as Bernard spoke about, your end-to-end business process. So buyers can pay their invoices to agreed-upon terms. I think of a client that I spoke to in Europe, a 60 billion euro concern, and they were paying many of their invoices upon receipt, and really because they just didn't have a more efficient way to do it. But once they implemented Ariba and were doing true e-invoicing, they had much better visibility, much better control, and began paying their invoices to agreed-upon terms. And now they're actually able to extend their DPO. Suppliers in aggregate, using the network, are also getting paid about 5 days faster, again, because we're eliminating the errors and exceptions with invoices, and we're driving process efficiency. This is ultimately reducing their DSO, So it's a win-win for both the buyer and the buyer suppliers that are participating. Let me just share a couple example case studies here. Carrefour being the first one. Of course, they're the largest retailer in Europe. They have over 7,000 suppliers that are sending about 1 million paper invoices each month. So it was huge volumes, and ultimately many of them were getting lost or had errors and exceptions. A lot of a huge staff required to reconcile and receive and process these invoices. They had to manually match them against purchase orders and goods received. They also had a bit of an archaic archival system that it was very difficult to get access to information and be in compliant with what the government was looking for. They moved to the Reba Network solution. They've gone from 100% of paper. They're now at 85% true electronic. They're processing still 12 million invoices annually. So another great story here is Deutsche Bank. They've enabled now over 4,000 suppliers on the Ariba Network. They're processing about 500 million invoices electronically. And pertaining to this webinar, they're connected the network to 7 SAP systems globally. So now 70% of their global invoice volumes are processed electronically through the Ariba Network. And I think a key savings lever for them was that through this efficiency, even though they leverage a finance outsourcing service, they were able to negotiate much more favorable terms with their BPO provider because of the process efficiency they were getting with the network. And they ultimately ended up reducing their BPO costs by about 30%. So significant savings, strategic transformation of their shared service and their AP functions. But as I mentioned before, suppliers have similar challenges, and they're also eager to collaborate with you as a buying organization to help them resolve those challenges. And I wanted to share some of the value proposition from a supplier's perspective, because at the end of the day, for your AP automation, your shared service transformation to be successful, you've got to connect with your suppliers. So there has to be a compelling reason for them to want to participate. The big one for them, I think, is really compressing the time it takes for you on the buy side to pay them. Today there's a lag of many days and sometimes weeks before the payment term clock really starts to kick in with paper processing because of the things we've talked about, invoice errors, just the inherent inefficiency of handling paper. And then frankly, there's also been a lack of incentive for companies to pay their suppliers on time. Apparently, it's been such a major issue that the EU has seen fit now to pass a new directive that's going to take effect in April that's going to make a 30-day standard invoice term compulsory for all businesses. And I'm sure everyone's aware of that, but there are significant fines and penalties for the lack of compliance on this. And so now there's really a sense of urgency for companies' ability to process invoices faster. And of course, cost savings for suppliers is critical. They need to keep their margins as high as they can. They have to keep their costs down. Handling paper, whether it's purchase orders received from their customers, managing errors from those purchase orders, reissuing them, changes, etc. Sending paper invoices, and again, the errors and exceptions associated with that. These are all very inefficient, very expensive ways of doing business. Another benefit that suppliers in the Ariba Network are seeing is probably more so for our more mature suppliers, but they're through promoting their business and their goods and services, they're actually gaining increased sales through the network. They're getting new clients. They're getting discovered in new markets, even outside of their traditional markets, and you see the MarkMaster example here. Motion Industries commented recently that they won a new contract with a new client, and they claimed that the new client basically said that it's because of the experience that Motion Industries has in the Ariba network, that they knew that that Motion Industries would have lower cost of doing business, and therefore that benefit would sort of be part of the contract relationships that the client would have with them. So all of these things add up to really compelling reasons for suppliers to want to be participating in the Ariba network. And as I mentioned before, we have about over 730,000 suppliers that are participating in many stories like these of great success. So to kind of conclude and wrap up the things that we've covered here, we've talked about how companies now are looking to business networks for improving and transforming the way in which they look outside the four walls and the infrastructure investments that they've made for inter-enterprise connectivity and collaboration with trading partners, similar to the way in which we leverage internet and mobile and cloud applications in our personal lives. As Bernard talked about, tremendous investments in infrastructure, and even to the point now where finance, shared service organizations, accounts payable are getting a seat at the table when it comes to strategic investments in infrastructure. And we're seeing more and more of that as the business case for this transformative change becomes better understood. We've talked about kind of more of from an end-to-end process perspective, how true e-invoicing, where a supplier submits an invoice electronically through the network, is really driving cost, process efficiency, working capital impact, contract compliance, and VAT compliance, and significant discount capture. And those become the significant savings levers for accounts payable shared service organizations to build the case for this transformative change leveraging the business network. Before we move into Q&A, I've mentioned several reports throughout this discussion, and I just wanted to review that there are links to those reports here, and these slides will be made available to you guys. But I talked about the Networked Economy blog that I blogged on this subject of turning on the power in your finance AP shared service centers. There's a link to that there. There's also a white paper that talks about how companies are moving beyond traditional BPO, finance BPO outsourcing, so that Deutsche Bank story that I mentioned before, and how they're leveraging this transformative change. There's a link to a white paper that talks about that. The CIO article, how SAP is pinning its future growth on the Ariba network. There's a link to the article there. And we'd love to meet you guys at Ariba Live. We'll be in Washington, D.C. and in Berlin later this spring, and I'd love a chance to hear from you and what you're doing on this front, and of course SAP's Sapphire event as well. So Susie, with that, I will turn things over to you for any questions that the delegates might have.
James, Bernard, thank you very much indeed. We do have a lot of questions to get through, so let's kick off. I'll start with this question. When you're talking about true e-invoicing, James, what is your definition of that?
It's a great question, because I think that it can be semantics, and it can also mean that someone believes that e-invoicing means something else. Let me sort of start with what I think e-invoicing is not. I don't think of scanning, as an example, and OCR as e-invoicing. Sometimes I think they're categorized that way. And the reason is that when you scan something or do an OCR with a piece of paper, the errors and exceptions that originate or on that invoice are simply scanned and OCR'd into an electronic format. So a bad invoice is still bad, and you may be able to process it more efficiently, but it's still a bad invoice. So to me, e-invoicing, true e-invoicing, is an invoice that's submitted in an electronic form by the supplier. Now, I include a supplier portal in that context, and the reason being is that, for example, at Ariba we have a trademarked feature called PO Flip. Suppliers can take a purchase order and flip it into an invoice, as an example, and they use our supplier portal to do that, but it saves rekeying. It's all done in a true electronic form, and the 80-plus business rules that we have in the Ariba network are applied to that invoice, even though it's created in the portal. True e-invoicing would also be like an EDI, an XML feed from an existing billing or order management system that's uploaded to the network. The 80-plus business rules I just spoke about are applied to those as well. Suppliers also can upload a CSV file. They can connect from QuickBooks and other Intuit systems, and the same business rules are going to apply to those. So that's what I would think of as true e-invoicing, an invoice that is submitted by the supplier in an electronic format.
Okay, James, you talked about a number of different accounting systems as well there, so that takes me nicely on to my next question, which is from a viewer who was asking, is it necessary for the buyer and the supplier, or perhaps more importantly the buyer, to have an ERP in order to leverage something like the Ariba network?
It's not required, but that is typically how this model works. We have on-demand solutions for procure to pay, for sourcing, for contract management, and those complement the Ariba network. However, the Ariba network is designed, whether it's cloud-based or on-premise, to really extend that ERP or AP system that exists today. So we've been talking about SAP in this webinar, but Ariba is designed and will continue to be an open network. So we'll connect to any ERP, MRO, accounts payable system in the back office for automating that accounts payable. So I hope that's clear. We're not doing accounts payable in the network. We're simply facilitating the collaboration between that buyer and all of its suppliers through the network. So it's really getting the invoices inbound effectively through accounts payable. And the reason I say through is that because they're coming in error-free, they don't need to be routed for correction. And if they're PO invoices, they're already approved, so they get passed straight through accounts payable, posted, ready to pay.
That takes me on to a question regarding security. So one viewer is asking or suggesting that one concern regarding using cloud-based technology for transaction processing is the perceived risk that data security could be compromised, as it is essentially outside the buyer's firewall. How does SAP and Ariba, or what is the SAP/Ariba position regarding this, and is there any kind of guarantee around the buyer-supplier data security when transacting through the cloud?
Yeah, it's a great question, and it's something that we take very seriously. We've gone above and beyond what is required for cloud-based and network-based services. If you're familiar with the banking industry, they have some of the highest levels of security requirements in the world, and what we've done is mirrored what they have. So we have, for example, we're PCI compliant, which means the transactions that are going through the Ariba network meet or exceed the same kind of rigor and audit that a MasterCard or a Visa, Amex, Discover have to go through. We also, and I'll ask Bernard to jump in and kind of share his perspective on from SAP's perspective, but Ariba also has all of what you would expect in terms of security, redundancy, in global support for our service centers. So Bernard, do you want to share any thoughts on security from SAP's perspective?
Yeah, I mean, security and the cloud are surely two things to marry, and I mean our observation is that service providers, courtesy of their economies of scale, are forced to invest in the latest advances of safeguarding technologies and safeguarding practices. And a service provider, in that respect, has an advantage over a local and on-premise IT team that sort of always trails the trends in hacker access and safeguarding technologies, or tends to trail the trends, whereas the service provider must be on top of the evolution. I would even go as far as saying this perception that local is safer is a misperception.
Yeah.
Let's carry on with the theme of data, though not really necessarily around this data security, but a question here from a viewer regarding does this the network approach here, so the Ariba network model here, does that assume that it will have full access to the buyer's supplier master data?
So I want to make sure I'm understanding the question correctly, Susie. Is the question, does the network? Well, let me try it this way. On behalf of large buying organizations, the Ariba network becomes an extension of their back office systems, and oftentimes, yes, what we'll do is we'll upload that customer's vendor master file to the network, and we do this for a couple of reasons. First of all, that data is only visible and available to them. It's not shared with others, but it's used in the network on behalf of that customer. What we do before deployment is we leverage that data to match their vendor master against the suppliers that are already transacting in the network. And we do that to identify what we would call a supplier match of those suppliers that they can now connect with immediately and begin transacting with. So it's a rapid deployment strategy. And then the remainder then are the ones that we will then target and onboard on behalf of that customer to get them transacting through the network as well. I hope that answers the question, but I wasn't sure I fully understood what they were looking for.
Yes, I think it's just a case of the Ariba network liaising with the supplier data, the vendor master database, and I suppose the question behind that from the viewer could be around therefore the quality of the supplier data with which you match the invoice with, is that reliant on the data that sits within the vendor master database? Yeah.
You know what else I would say is that we're doing several other things with respect to vendor master data, and one is, of course, with the supplier portal. That is a significant aspect and value proposition of the Ariba network, is that customer, that buyer's suppliers now maintain their own contact information, their bank routing information through the supplier portal, and that then is passed back to the supplier. So it reduces that company's cost of maintaining vendor data. And then, of course, the portal itself also provides real-time visibility into the invoice and payment status, managing contracts. And that has a dramatic impact and reduction of those inbound inquiry calls that I hear over and over again. Bernard, I'm sure you do as well, that many AP organizations have upwards of 50% of their staff dedicated to just handling those kinds of calls. And with the supplier portal, you're giving them real-time access of information, self-maintenance, and it's always in the supplier's best interest to keep their information updated, and that's passed back to the supplier in their vendor master file. So there's a lot of value in this system for improving vendor master data management.
Okay, thank you, James. Another question from a viewer is regarding the Carrefour and Deutsche Bank examples that you referenced there with electronic invoicing. I think people are familiar that Ariba, the Ariba solution, has the supplier enablement program as part of it, or it is in the functionality is there in isolation, so that the buyer has a choice. Could you just maybe explain if the two examples that you used there did actually leverage the supplier enablement program?
Yeah, so a couple things. There are organizations that for a variety of reasons choose to do supplier enablement on their own, and that means that there are two aspects. There's the technology required to reach the suppliers and then encourage them to come and enroll, and then there's also the phone centers that are calling out to these suppliers and explaining to them what the customer wants them to do, how to do it, and the benefits of doing it. It's usually the exception and not the norm for companies to want to do that on their own. Most companies leverage Ariba's expertise. We have over 300 professionals globally that are dedicated to targeting, onboarding, and enabling suppliers on behalf of our customers. We do this in over 18 different languages, 72 different currencies, and we're just so much more effective at it because it's what we do for a living. It's a core competency of ours. So there are occasions where customers will try to do it on their own, again, for a variety of reasons that are always legitimate, but we find the customers that leverage our supplier enablement services are always going to have a better success on that. In addition to the services, there are also technologies that are inherent to and available to all customers as part of the Ariba service, and that includes a supplier enablement dashboard so that you can effectively manage how you're targeting and enrolling suppliers, where they're at in terms of the of that program. And we also have a very cool feature that is part of our strategy for 100% digitization, which means on an ongoing basis, when a supplier's, if you're still scanning paper or they're not doing true e-invoicing, eventually that supplier is going to hit a target number of invoices on a monthly basis. And so we have this program set up for quick enablement, where once that supplier hits that threshold, the technology is going to reach out to that supplier and say, look, you've hit this threshold. Your customer really wants you to send these invoices electronically. Click here to find out more. And it's a very effective way in an ongoing lights-out kind of a context to continue to get suppliers onboarded into the network, and that's also proven to be very effective.
A couple of questions coming through regarding the difference between SAP SRM and Ariba. What would you say is the overlap, and what would you say is distinctively not the overlap? And I'm afraid this is my last question, so if you can keep the answer relatively brief.
Well, let me take a first cut, and then I'll ask Bernard to add his commentary on that. The clear distinction is the Ariba Network. That, again, why SAP acquired Ariba in the first place is that we now provide this global business commerce network that is now looking outside the four walls of an organization for this inter-enterprise connectivity. And I think that the key distinction between this strategy, which is that one-to-many point of connectivity, the key difference there is it avoids having to do that one-to-one connectivity that I think was inherently required and what most companies are doing today in terms of trying to connect suppliers with an internal supplier portal. But Bernard, let me ask you if you want to take a stab at articulating the difference between what SAP had and now the Ariba solutions.
Well, I would chime into the same message. I mean, on a high level perspective, the Ariba network extends the reach of the on-premise SAP solutions across the network to all business partners, equal to companies that also use SAP, as well as companies that use other platforms, as well as to suppliers that don't use elaborate platforms. And I see that, and I mean, we said it several times, I see that as the proposition that made SAP buy Ariba in the first place.
James Tucker, Bernard Fisher from SAP, thank you very much indeed, and I'm afraid that draws our webinar to a close today. Just to remind you that next at sharedserviceslink.com we have 2 events for your diary to take note of, and I'm very pleased to say that Ariba is sponsor at both. And the Summit for Leaders in Financial Services in Chicago in April, which is only really 5 or 6 weeks away, and then we've just literally launched Source to Settle as a Service, and that's taking place in June in London. And please do join us for our next set of webinars coming up later on this month and in April. For the time being, good luck with all of your shared services initiatives, and we look forward to welcoming you next time. Goodbye.